I saw was 2,583, maybe a little bit above that. So that is the new all-time record high for the price of gold. Gold is now up 25% on the year, and gold still going up. Silver almost back to $31, above $30 today, up, percentage-wise, it was a bigger move than gold. Silver stocks, of course, are still well below their 52-week highs, because even though gold made a new all-time high, silver didn't even make a new high from a few weeks ago or a month ago, wherever it hit that level. So silver is still the sleeper, and the silver stocks are very cheap. So over the weekend, you can go to Schiff Gold. I don't think we're just going to see gold going to 5,000 as a result of this easing cycle. I think it's going to go much higher than that.
Gold has hit a new all-time high, rising to $2,580, up 25% this year. Silver is also performing well, trading above $30, but it hasn't reached new highs like gold. Silver stocks remain undervalued compared to their peak prices. Some analysts believe that gold could surpass $5,000, driven by ongoing economic conditions and easing cycles. Peter Schiff, a prominent economist, financial commentator, and CEO of Euro-Pacific Capital, explains the rising price of gold indicates that the Fed is making a mistake by considering rate cuts, especially a 50 basis point cut. Instead, the Fed should be raising interest rates. Gold hit a new high on Thursday, signaling these concerns, though it's not widely discussed. The markets are currently expecting a soft landing with inflation returning to 2%, but this view is incorrect. A hard landing and rising inflation are likely instead. No one is factoring this into their models. Peter also tells last Friday, the dollar fell significantly against the yen, closing below 141, its lowest level for the year. The dollar index also dropped by about 1% but remained above 101. The dollar was weak against the Swiss franc, nearing a key level at 84 cents, but did not break it. Despite this, Japanese stocks didn't experience major declines, recovering after an initial drop. The market's rebound was partly fueled by renewed speculation that the Fed might implement a 50 basis point rate cut, which also boosted gold prices to record highs. Historically, the Fed has not started rate-cutting cycles with gold at all-time highs. For instance, during previous rate cuts, gold was significantly lower than current levels. This pattern suggests that ongoing monetary easing and inflationary pressures contribute to higher gold prices. Let's dive into the video for more insights. If you enjoy the content, don't forget to give us a thumbs up and subscribe to our channel for the latest updates.
We're going to get this huge pop in inflation, and we're going to get a recession, right? Right now, the markets are thinking we're not even going to have a recession, right? We're going to have a soft landing, and inflation is coming back down to 2%. They're wrong on both. We're going to have a hard landing, and inflation is going up. And so nobody is modeling that. Nobody is expecting that. Maybe gold is. I mean, gold is going up. Again, the rise in the price of gold is what shows you that the Fed is making a mistake, that any cut is a mistake, especially a 50 basis point cut, but they should be hiking interest rates. But no one is covering it. On yesterday, gold made a new high on Thursday. Last Friday was the dollar breaking down against the yen. I thought it might break down below 142. And it did. Not only did it break below 142, it closed the week below 141. The dollar yen closed at 140.9. This is the lowest the dollar has been against the yen all year. And the dollar index also was down about 1% on the week. It still hasn't collapsed. It's still above 101. And the dollar is still weak, especially against the Swiss franc. It didn't crack 84 cents yet. I mean, that's going to be, I think, a key level. I think it closed around 84.9. We were lower, but dollar recovered a bit. But the dollar has been particularly weak against the Swiss franc. Remember, it's only about 7% above an all-time record low. But we got the weakness in the yen, but it didn't really cause any kind of significant selling in Japanese stocks. I mean, there was an initial maybe 2% drop on Sunday night, but the market kind of recovered. And so by the time we rolled around to our time zone, we were already on the recovery. And then we got all of this 50 basis point stuff that started to, rekindle the hopes that the Fed was going to do 50. And I think that is what caused the rally in the stock market. But it also caused the rally in gold. And this is something that's very significant too. We'll see where gold is. But gold's making record highs, and the Fed is about to start cutting interest rates. That's never happened. I mean, if you look at the last couple of rate cutting cycles, the most recent one started in 2019, July 31st, 2019, when the Fed cut rates. And then, of course, they eventually went to zero with COVID. But that first rate cut Gold was at $1,412. That was the price of gold, right? Over $1,000 an ounce lower than it is now. But that was still 26% below the record high. The record high was 1920. So gold was way off its highs before the Fed started cutting. If you go back to the cycle before that, which was the September 18th, 2007 cut that preceded the '08 financial crisis, but that was the first cut. At that time, gold was at $726 an ounce. It was 15% below its record high from 1980. So the Fed has never started a cutting cycle, at least in modern memory of these cuts, with gold at an all-time record high. And, it's not a coincidence. The first time the Fed started cutting in 2007, gold was 726. So I didn't look back when they started cutting in 2000, but then when the Fed started cutting in 2001 or after the dot-com bubble popped, gold was under 300, right? So when Greenspan first started cutting, right, you had gold under 300. And then when they had to cut rates again, leading up to the financial crisis, gold was 726. When they started the next easing cycle, it was 1412. And now they're starting another easing cycle with gold at 2600, right? This is not a coincidence that the Fed keeps easing, causing inflation, printing money, and the price of gold goes up.
Peter highlights that the U.S. government ran a massive budget deficit of $380.1 billion in August, far exceeding expectations and marking the largest August deficit on record, even surpassing the early months of the COVID-19 pandemic. This increase is partly due to higher interest payments on debt and weak tax revenue from a struggling economy. The deficit highlights how deteriorating government finances and economic weakness are not fully reflected in official statistics. The government may push for rate cuts, including a 50 basis point reduction, because it cannot afford the current interest levels on its growing debt. Peter Schiff, in his live streaming, discloses that this year, gold's market cap has grown significantly, surpassing Bitcoin's entire market cap by more than 5 times. Gold is valued at over $17 trillion, while Bitcoin is around $1 trillion. Despite Bitcoin's potential for rapid value changes, it's gold, not Bitcoin, that is reaching new highs. Let's get back to the interview.
But the real reason that they're going to do 50 basis points was the news that we got yesterday from the U.S. Treasury Department issuing their budget deficit for the month of August. The U.S. government ran a budget deficit in August, 1 month, of $380.1 billion. That's 1 month. That used to be an entire year. In fact, I remember when $380 billion was a bad deficit for a whole year. That was a big number to run, $380 billion in 1 year. We just did it in 1 month. This is the biggest deficit we've ever run as a nation in a month of August. That includes the 2000 when we were in, or 2020 during the COVID pandemic. In fact, the only months that we had budget deficits larger than the $380.1 billion that the government just ran in August was during the early months of 2020 when all the COVID stimulus started, right? So we locked down the economy and we were sending out all these stimulus checks and all the PPP money and all that stuff, right? All that money. That's when we had a bigger deficit. Plus, of course, the government tax collection went way down because people stopped working. So they weren't getting, the payroll taxes, right? People weren't working. People weren't spending. So government tax revenue went down, but their expenditures went through the roof. That's the only time that we had a bigger month. Forget about just August. That's the only time we ran a bigger deficit than we just did. In fact, if you look at what they were expecting $252 billion. This is $130 billion more than the markets were expecting. That is a huge number. And look at the increase from July. July was $243.7 billion. So the deficits are blowing up. But if you go back to August which is the most recent comparison, last August 2023, the government had a surplus of about $80 billion. So we went from an $80 billion surplus to a $380 billion deficit in 1 year. That is a massive deterioration in the U.S. government's finances. Now, part of that is due to all the bonds that matured and had to be rolled over at higher interest rates because we're now spending over $1 trillion a year on interest on the national debt. But a lot of it is the result of a weak economy that is not generating enough tax tax revenue to cover the bill. And so the deficits are exploding. This shows that the economy is much weaker than the statistics would reveal, and probably jobs too, because there's probably, fake jobs don't pay real taxes. So these government numbers, to the extent that a lot of the jobs don't exist, one way you would know that is looking at the tax revenue, right? Because if the jobs actually were there, well, people would be paying taxes on what they were earning. But the government is having this huge collapse in its fiscal position because it doesn't have the tax revenue. But wait until the recession really kicks in and the spending explodes. This is why they're cutting rates. It's because the government can't afford the rates where they are. And so they need to come down. In fact, they need to come down a lot, because even if the Fed cuts 50 basis points, they still can't afford it. Not with this debt. How Bitcoin is going to take over gold's market cap. Well, this year alone, gold's market cap has increased by more than 5 times the entire market cap that Bitcoin is right now. Just the gain this year is more than 5 times Bitcoin's entire market cap. There's more than $17 trillion worth of gold, and there's maybe 1 trillion Bitcoin. Although that 1 trillion can evaporate almost in an instant, because it's just nothing but air. But the key is that it's gold that's making the new high, not Bitcoin.
The current economic indicators and market movements suggest a turbulent period ahead, with rising gold prices reflecting broader concerns about monetary policy and fiscal health. As the Fed navigates these challenges, the divergence between gold and Bitcoin highlights contrasting perceptions of value and stability in today's financial landscape. How might the Fed's potential rate cuts impact both gold prices and the broader economy in the near term? Share your thoughts in the comments below. We'd love to hear from you. If you found this video useful, don't forget to give it a thumbs up and subscribe for more content. Thanks for being a part of our journey.